Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market preparation video for May 23rd, 2018. So yesterday, doggone it, that resistance of 25,000 just proved to be too strong amid the presidential comments on trade and the tweet storms that we've been experiencing lately. Just proved to be too strong with all of that going on. Now, that's the bad news, and I know most people are focused on that. If we look at all the major indexes, the diamonds here, bearish engulfing candle, the spiders, bearish engulfing candle, the Qs, bearish engulfing candle, and IWM, a bearish engulfing candle. Now, all of those we were kind of expecting, at least I have been warning, to be a little bit careful as we approach that resistance, to be careful not to be buying up positions or chasing the market into those positions. So hopefully you didn't get too damaged by this. Now this morning we get the unfortunate event that futures are pointing sharply lower, and as you can see, the diamonds are expected to gap down here more than 150 points lower this morning. Now that happens to be a little bit of a price support right there. Remember, we had that little consolidation that gives us just a tiny little bit of hope that we will see a little bit of price support come in right in here. Now the good news is we are still above the 50-day moving averages, and we are still above trend. So although no one wants to see this gap down pullback occur, as long as we hold support in here, we're probably going to be okay, at least for the short term. If we begin to fail through the 50-day moving average, if we begin to fail through these trends, we're going to be in serious trouble. Now, the diamonds and the spiders are at the most risk. They are the ones closest to those 50-day moving averages, where the Qs and IWM have sufficiently moved away. Let's also keep in mind that what we're looking at here is we're looking at that 200-day moving average rising up toward that 50. So we need to find that support here pretty darn soon. We don't want to see that 50 diving below 200. That could be a problem for the overall market. So as these moving averages have, and by the way, notice if we were to, let me clear up all of these drawings, you can see the shorter term averages have crossed back up through that 50, but that 50 has not turned higher yet. So we need to see a little bit more hanging on here. And it's okay with me if we consolidate in this range. We just don't want to see the bears take over and really drop us through those support levels. So unfortunate yesterday. No one wants to see that happen, but darn it, you know, that's what comes along when we're testing resistance levels, and there's so many things up in the air creating uncertainty. First, you know, the one that will be resolved today is we have the FOMC minutes coming out at 2 o'clock p.m. That will resolve maybe a little bit of giving us a little bit of an insight what the FOMC is going to be doing moving forward. And since I have this here, let's talk about these. We have a PMI flash composite this morning. They're expecting that to stay strong and steady. Manufacturing looking good, services looking good, no problems there. New home sales are expected to pull back just a tiny little bit, but remember they had a huge surge last month, so a little pullback would not be out of the question. And then, of course, the petroleum status report has been showing just kind of a steady little declining trend in supplies, helping to support those oil prices. If that were to shift, we could see oil maybe shift a little bit lower too. So let's kind of, and right now oil is kind of helping hold the market up. So let's hope that holds strong today. On the earnings calendar today, we had, there's about 33 companies that were reporting today. One being this morning of Target. Target reporting this morning, and you can see they missed on their earnings report, gapping down substantially here this morning. So not good, and that's certainly not helping the market at the moment. We also had have Lowe's reporting today. It looks like they have not reported yet this morning, so we'll have to continue to watch those reports. And then this afternoon there are also some reports like from Copart. They're reporting this morning, and NetApp will also be reporting this afternoon. So kind of keep in mind, stay on your toes. We got a lot of those earnings reports that we still have to deal with, even though this earnings season is really winding down. Let's take a look at the VIX. The VIX yesterday, surprisingly, did not have a huge response higher on the selling yesterday. That's really kind of interesting. You would expected to see a bigger push up on the VIX. So we'll have to watch that closely. Now this morning, my guess is we will see that bigger response this morning with the gap down. But we don't want to see us breaking through this downtrend line, and I really should adjust that just a tiny bit higher right in there. We don't want to see us break above and hold above this downtrend line or this resistance here. Price resistance in this area is going to be really important. Okay, it comes all the way back over here. We want to see that hold. So kind of keep an eye on the VIX. It will obviously probably spike up a little bit today with a little bit of fear coming into the market. Let's also take a look at T21. 22. And yesterday I mentioned, the high possibility that T21-22 was suggesting that we were reaching that bearish, reversal zone. So we shouldn't have been too surprised that we, kind of stretched out here a little bit and a pullback was going to happen. Of course, no one knew that we were going to get that those presidential comments on the trade negotiation concerns and the tweet storms that have been going on, but we're up here in this bearish reversal zone. So any pullback in here just really shouldn't be feared too much, as long as it doesn't get too wild here and pushing us below those trends and those major moving averages. We need to hold on to there. Remember, any pullback into here, and a lot of people look at pullbacks as a negative. Please keep in mind that it's the pullbacks that bring the buyers. Okay, and bring buyers back into the market. So it's those pullbacks that give us an opportunity to pick up stocks at a lower price. So don't fear those as long as we continue to hold trend. Now, understandably, if you're long a bunch of positions or if you chased into this move, that could put a little pain on your account, some losses coming in there. But that should be a really good lesson on chasing or jumping into the market too heavily as we approach a major resistance level in the market. So keep that in mind. Hey everyone, I want to wish you all a fantastic day. I want to wish you great profits. And if this is the first time you've seen this information, hey, do me a favor, click that subscribe button on YouTube, the follow me button on Facebook if you happen to watch the video there. Also, click those thumbs up buttons. That helps me out an awful lot. Click that subscribe button on and make sure you click that bell on YouTube to make sure to get notifications. And if this is something that you would like to share with friends and family, please feel free to do that. Everyone, I want to wish you a fantastic day, and I will talk to you all very, very soon, bright and early Thursday morning. Take care now.